Hey guys, and welcome to another video. Today we're going to look at Visa stock and whether it's overpriced or underpriced and how much money you can make with it at the current price. So let's first look at the graph. You can see that it's almost at an all-time high, which means you won't get it really at a discount, but that could still mean you could make money with the stock. So first, what is Visa? Visa is a payment company for credit cards, and it makes its money by charging fees for using credit cards and so on. And maybe also debit, I'm not sure right now. But let's start looking at the financials. So we can see that their revenue has increased from 15 billion to 29 billion. And it's still growing quarter over quarter, I think. Yeah, it is. It also has positive net income, which has also grown to 14 billion from 6 billion. It has less shares right now than it had a few years ago, from 2.4 billion to 2.1 billion. Now let's look at the cash flow. The cash flow from operating activities has increased from 5.5 billion to 18 billion, and their free cash flow is almost the same as their cash flow from operating activities, which means they don't spend much on capital expenditures, or they don't have to spend that much on it. So the free cash flow has increased from 5 billion to 17.8 billion. Now let's look at how much debt they have. They have 2.1 billion in debt, total net debt, and their total debt is 22 billion, almost 23 billion, and with their income of 14 billion, they would only need a bit more than a year to pay it off. Now let's look at their market cap. Is really high with 501 billion, which is a high market cap. So you would think that it may not grow that much in the future, or it's a bit overvalued right now. So let's look at their PE ratios and net income. So their price to earnings ratio is around 30 average. Right now it's at 31. And their net profit margin is at 50%, which is really high. So you would need to be a bit careful because it could be a bit higher than average. The average is around 40 to 45, maybe 50. 40 to 45. And their return on invested capital is also really high with 30 right now. So let's now calculate the value of Visa. By the way, something nice about Visa is of course that it's the most popular credit card provider. It's more popular than, for example, MasterCard and American Express, which almost nobody uses in Europe or other countries than the USA. And that's a good thing for Visa because it can outperform its competitors. So now let's calculate the value. First we put in the revenue of 29 billion. Then revenue growth of, let's go low with 4%. That's really low. Let's put in right away 6%. Then we need the price to earnings. We put that at 15 for the lowest. And the profit margin is let's say 35, I think was the lowest. Yes, 35%. In this case, our buying price would be $38 and we would make a loss on the investment over 10 years. So let's put in some more reasonable numbers. For profit margin, that's the first thing I would change to make it more reasonable. So maybe 40% would increase the buying price to $43. And yeah, I think, to be honest, 45% is a reasonable assumptions for profit margin. It's high, but credit cards are a high margin business. And their revenue is something else we can change to 9% maybe. 9% would almost double, would more than double their revenue. So these are more reasonable assumptions. In this case, you would still make a loss over 10 years. That's mainly due to the high PE, of course. But now let's put in some higher assumptions. Let's say 12% revenue growth would make their revenue triple to 90 billion, which would give us a buying price of $80. Let's put in a bigger price to earnings of 20. Then we would get a buying price of $113 and would make a profit of 50% over 10 years, which is trash. But okay, let's put in revenue growth of 15% maybe for the highest. Would make the revenue go up to 120 billion. I wouldn't go higher than that. And 50% for profit margin is really high. And 25% for price to earnings, and we would still get a buying price of $204 with the highest assumptions, but we would make 3 times the profit. So you could, if you think these numbers are realistic or achievable, you could buy Visa, but I would recommend you to wait a bit because it's a bit overpriced with these high PEs. You should have bought a bit lower, and I didn't, which is dumb because I wanted to buy it, but okay. 180 or something like that would be a better buying price, but still, that's still not that low. I would like it even lower than that. But now let's look at the cash flow model to calculate the value. So in this case, we would need the growth rate from financial bankers, which you can find on Yahoo Finance. It's 14% per year for the next 5 years, and 7%, okay, that's already here. Okay, then terminal value 15, year 0 free cash flow is 17.8 billion. That's answer 17,800. And stock-based compensation is, in this case, 600 million, which is pretty low. 600 million would be that, I think, yeah. Okay, that's a really low number for such a high free cash flow business. 600 billion only. That's really nice. Okay. Then net cash and net debt is 2 billion. So we put in minus 2,000, and shares outstanding is 2.1 billion. So we put in 2,100, and we get intrinsic value per share of $153 with a current margin of safety of minus $61. But in this case, you would even make a profit with these assumptions because that's mainly due to their low stock-based compensation, I think, and their low net debt and higher growth rates. But yeah, in this case, it could be a better investment. Still, you won't make 15% per year, but these are probably, yeah, depends on how you look at them, reasonable. I mean, they would still make almost 50 billion in free cash flow, which is still a bit high if they... Yeah, okay, it's still a bit high for this kind of investment. But these are the growth rates financial bankers gave us. If you trust them, you should look at it at a price of $153 to make 15% per year. But yeah, I would recommend you to wait for Visa to go a bit down. But it's a nice and safe company to have at a better price maybe. So if you like this video, give it a like, and bye.